Welcome to the daily update, where I'll go over the action in the market for Tuesday, December 12th, and then we'll see how things look for Wednesday, December 13th. We had another update. You could kind of tell it was driven by the algorithms. We went right up to R2, stopped at about that point, and closed at that point. Yes, we are positive. You can't deny that. All of our charts are pointing higher, but we're getting to the underside of some long-term resistance. Now, we've broken through resistance on the daily charts. This is longer term, and I have a chart to show you, and we keep a close eye on that. Is the market going to keep going up? We're still in a time of positive seasonality, but we have some big things happening. We have PPI coming out in Wednesday session. We have the Fed going to make an announcement. Who knows what is going to be said at the press conference and how the market's going to react to that. So, yeah, we're positive, but we want to be careful at the same time, because when everything is firing in the same direction in the stock market, that's when we start to get a little bit nervous. Doesn't mean it's going to happen right away. It just means that the market could be vulnerable. At some point, people are going to want to take some profits that they've been experiencing now, and that could lead to a higher wave of selling. We just have to wait to see how that unfolds. Before I get started, I did get an interesting email from YouTube. They send out an email every month and tell you how the channel's doing and everything. This one came out for the whole year. I was kind of surprised when I said, if you can see right in the middle, ooh, is this the channel of the beast here? We have 666. That's how many subscribers I gained. Now, I know that my channel isn't as popular as other channels. I'm not trying to entertain. I'm trying to educate and inform. And I like to think that I give a higher caliber of information, which weeds out a lot of people who are looking for quick answers, who don't really want to learn the information behind what's going on. And that's okay. This is the way I like to educate and share what I know with other people. But I just thought this was kind of interesting, where I did have a lot of uploads and a lot of likes. I would like to see if the comments could get a little bit more, but hey, I'm happy with how things are happening right now. So I want to just say thank you to what I consider to be a prosperous 2023. Now, we're only halfway through December, and this could either go up or down from here. But without you, it doesn't really get to the point of having any success. I could record these videos. In fact, I did for years. I recorded these videos. That's how these videos started. They were for me, because there's so much information out there and I had a hard time getting it all together. I recorded these videos and I'd be the only one to watch them. Then I started to let a few other people watch them, and then I decided to start posting them on YouTube. So I hope you find them more helpful all the time. Thank you very much for your support and your viewing, and any feedback that you want to give. I'm always open to receive that. Okay, let's go back and talk about what happened. Right at the open, we had a lower open. The initial reaction to the CPI report was negative. There was one of the numbers, the core CPI, that came in hotter than expected. The market kind of freaked out. That led to a lower open right as stock prices were getting ready to trade. And we fell down below the daily pivot at 46.13, but then we rebounded back up to the unchanged level. Then we started to go higher. Prices rose up to R1 at 46.33. We got up to R2 at 46.44, and we closed at the high for the day. We were up 0.46%. Again, not a real huge move, but we're seeing these less than a percent moves going up and sometimes going down. The market's just kind of stealthily moving in its overall direction. We were above average with volume, and we are positive, but we are getting more and more overextended. And the intermediate term, our list is getting longer. Our list in the short term was already quite long, and we have a few things even in the long term that we're keeping an eye on. It'll be about interest rates and what is said about interest rates and what the Fed is going to say in Wednesday's session. Of course, we're keeping an eye on the geopolitical events, specifically what's happening in Israel. Some comments. Mega caps had a pretty good day in Tuesday's session, so that helped the indexes to move up higher. Here's our short-term list. We have our ADX in the short term, and that's been extended now for quite a while. We're well above 40. Our 20-period exponential moving average, the Stochh RSI, which Just a few days ago it was extreme negative. Now it's back to being extreme positive. The Williams percent are the CCI 14 and 20, the stochastics chart, the PMO oscillator, and I changed this. I said VIX yesterday. It should have been RSI. For some reason, I get those 2 3-letter acronyms mixed up with each other. But we are looking overextended, and that's a pretty long list. Some of these are our usual suspects that anytime we see any kind of a move, they're on this list, but we're seeing more uniformity now. This is the list that's getting longer. We also have the intermediate term ADX, the 50-period exponential moving average, our standard deviations chart. We're up into the +3 area. The Arun is coming down a little bit, but is still extreme. The PMO studies, the Sean trend meter, another new addition now is the Chaikin oscillator. The balance of power, another new addition. The CMB composite, another new addition. The S&P 500 bullish percent index, as well as the bullish percent index for the NASDAQ 100. The RSI, which again I had as VIX yesterday, based on 14 periods. Another new addition now is the percent B oscillator. We closed outside of the upper Bollinger Band. The boom indicator, also a new addition based on 20 periods. And then another one that's been on our list for a while, the new high, new low study based on 10 periods for the S&P 500. Long term, we still have the 150-period moving average study. We're still dealing with the scenario. We'll see if this scenario can change in Wednesday's session when Chairperson Powell comes out and gives his speech. Right now, the Fed is keeping rates higher for longer. And there's that. I'm seeing a little bit more concern now that if the economy starts to pick up steam, this idea that the Fed could go back and raise rates is it's not on the table, but it's not far off to the side either. And if we start to see more Goldilocks or even weaker economic reports, then the market will latch on to the idea that the rate cuts will actually start to happen. Of course, we're watching Israel, we're watching oil, and we're watching earnings. The dollar was up slightly and interest rates were down. We still have the 10 to the 2 and the 10 to the 3-month yield curves that are inverted. That hasn't changed now in about a year and a half. Sentiment really didn't change. In fact, it didn't change. It came in at 68, where yesterday it was also at 68. Our trend is positive. We're above the moving average, but both the short and intermediate term ADX charts are above 40. Our bias is positive and our momentum is positive. We did get the NFIB Small Business Optimism report that came out. That came in at 90.6, just a tick down from the 90.7 they had expected. Here's CPI. It came in up 0.1%. The headline number, oh my gosh, they expected it to be unchanged. Last time it was unchanged. So this produced a little bit of a negative reaction. But it was the core that they expected it to come in at 0.3, and that's where it did come in. But inside of that were some things that were producing some concern. Then we did close at 4.2% on the 10-year yield. We're still above that 4.02%. Here are some charts. Here's the NFIB Business Optimism Index, where it did tick down just 0.1%. It has been declining overall over the last number of months. Here is CPI year over year. The blue line is the total, and that's what's going down, and that's what everybody likes. We're trying to get back down to this 2%. At least that's what the Fed's trying to do. And when you look at the core, it's also coming down, but we're at about 4% on an annual basis. When we look at the CPI services and commodities year over year, the services are coming down, dropping below that 6% level, and we're pretty much flat when we look at the core commodities. And so that is just about at the 0 level. We haven't quite dropped below 0 yet. Here's our chart just showing the rate of change going back year over year, where we are declining with the CPI. That's the headline number. The month over month did tick up just a little bit since we were up 0.1%. When we look at the core, we are continuing to decline, and we did also advance a little bit with the rate of change when we look at the month over month reading. So as of right now, there's a 98.2% chance that the Fed is going to leave rates unchanged when they make their announcement after or later on in the session on Wednesday. And that came down just a little bit. The CPI spooked just a few people, so we saw a little bump up in some of these other indications over here. But for the most part, there's pretty much a unanimous decision that the Fed's not going to raise rates. Here's our intraday chart where we had a lower open. We went down below the daily pivot. We came back above the daily pivot, got to the unchanged level, and then pretty uniformly just marched our way up to R1, kept going, marched up to R2, hit resistance at that area, fell back a little bit, and then closed pretty much at the high for the day. Here's our intraday chart where we were more positive before the report was released. There was the initial negative reaction, but then we saw the recovery going into the cash session, and we're up slightly in the initial overnight session. We are still seeing where value is outperforming growth. They're both up. They're both looking a little bit better, but we want to see the blue line going above the red line. This shows a little bit of an improvement here. Our intraday chart of growth to value for the S&P, we were positive, but we're not really seeing any kind of a real strong upward move right now. Our end of day charts, growth did outperform value slightly for the large caps. It was down, but down less for the mid caps, but it was down more for the small caps. Here's our end of day chart where we ticked up just a little bit with this ratio that we look at, but we want to see this really going up. And overall, it has really been declining, even though it's in a longer term uptrend. Keeping an eye on our trend, we are well above 40 now with ADX and really not showing any signs of rolling over, but we still default to positive because the green line's on top. We're getting even higher now with the short-term ADX and not really showing any signs of rolling over, and the green line is also on top. Volume is just about average. We're not really breaking out with huge volume, but we are performing above average over the last few trading sessions. Sentiment, we're still wondering, are we getting into this choppy time, or are we coming out of it now and coming into the time when we see volatility really start to drop as stocks go up? The Ulcer Index is still giving us a very low reading, showing there's not a lot of fear. We did decline with the VIX when we look at the line chart as well as the bar chart. The volatility of the VIX actually picked up on a closing basis, but we're pretty much sideways when we look at the bar chart. The equity put call ratio, I couldn't show these yesterday because they hadn't updated yet. We did see a little bit of a tick up. This might be folks doing some hedging, but we're watching this too. This is our 5 period. We're wondering if we're starting to get extreme. It's actually going back up just a little bit, so it's not giving us an extreme reading at least yet. Here's a longer term look at that same chart where we are declining, and that is positive for the market. But we're not really seeing any kind of a breakout here. We were down with the risk on to risk off ratio. We are showing some more improvement as we're going back up, but we were down in Tuesday's session. Looking at our advanced decline line, we are looking really positive here based on price and volume. We're also really showing a real breakout of the new highs. Even though our 5 period is flat, we are turning back up with the 10 period. We're not extreme with the advanced decline ratio. We're above 0 and advancing. That's positive. Accumulation distribution continues to be positive, and the chicken money flow is looking more positive. Now, you could make a suggestion that maybe we're getting back to an extreme reading here, but we were higher than this just a few days ago. Looking at the cumulative NYSE advanced decline line, we did come down just a little bit, and we turned down slightly with our regular advanced decline line, where we were pretty much flat with this other advanced decline line for the NYSE that we look at. When we look at our advanced decline line studies, we turned down with the common stock. We were up with the S&P, down with the mid caps, and down with the small caps. Here's our daily chart, and you can see we're coming back above this previous high, okay? But now we have another previous high set back in 2022. We're just about at that level now. Is this going to provide overhead resistance? We're waiting to see. We're very overbought now. We're quite extended, and we're wondering, is the market going to have a real hard time breaking through that? That's clue number 1. On the bottom, we are just barely above the moving average with volume. We're getting extreme with the 20 and 50 period moving average study. We actually ticked down just a little bit with the 200. The boom indicator based on 20 periods, that's short term. That means that we're getting far away from the 20 period moving average. That is starting to get extreme. We're looking a little bit better with the 50 and 200 period moving average study. The Stochk RSI is now extreme positive. The Williams percent R has been extreme positive for a few days. The CCI 14 and the CCI 20 are also extreme positive. We're not extreme with the force index, and we're looking a little better here. We're crossing back above the midpoint, and the midpoint is starting to turn back up. But when we look at our stochastics, we're extreme in the short, intermediate, and long term. We're in the +3 standard deviations again with our Keltner band study, and we're at the high end of that +3 standard deviation. Intermediate term, the balance of power, just barely starting to go above the black line. As I like to point out, though, I put these black lines on these charts. There's nothing magical about them, and so they're kind of arbitrary. I just kind of eyeball it and say, okay, this is a good place to put that line, but we are getting back to an extreme reading. The go, no-go system is still positive. We're still looking quite positive with our highest high value. The TTM squeeze is still declining. We want to see this turn back up if we're going to turn more intermediate term positive, according to this indicator. This CMB composite, again, another arbitrary line that I put on here. We're not breaking above the line, but we're coming right up to the extreme positive line, where the ease of movement is pretty much sideways right now. The Arun actually declined a little bit after giving us a pretty extreme positive reading. We're still advancing with the summation index based on price, and we're actually crossing above this previous high based on volume. So that is still showing a healthy environment. We're also advancing with the summation index for the NYSE based on price and volume. The Swenlin trading oscillator is turning up based on price and volume. That's positive. The PMO is starting to turn back up, but we're getting an extreme positive reading. We're also still positive based on price and volume. We're not extreme with the PMOs that are rising. We actually ticked down just a little bit. We're no longer extreme with the buy signals, and we were flat. We're still extreme positive with the PMOs above zero. And we continue to be positive with the Elder's Impulse system for the S&P. We're also positive with the parabolic SAR with the dots underneath. The slope oscillator continues to decline and is no longer extreme positive. The MACD is trying to turn back up above its moving average, so it's showing some improvement. So when we look at our short-term oscillators, the slope continues to decline, but it's still positive. We're turning back up with the TSI. We're trying to turn back up with the MACD, the PMO. The PPO is turning back up, but it hasn't crossed above its moving average yet. We're pretty much flat with our long-term oscillator with the TRIX, and we're still negative with the KST. We're above all the plotted moving averages in our moving average tree, and the longer we stay above that, the more these lines tend to smooth out. We're still getting more extreme with the bullish percent index. Now, we could go higher than this, but this is just that warning area where we want to be aware of this. The NYSE bullish percent index is continuing to advance and is above 50. That's positive. And we're still extreme positive with the NASDAQ 100 bullish percent index. We're still hanging in there. We haven't dropped down below 70 yet, but that's just something that we're a little bit concerned about. The Sean trend meter is above the red line and actually starting to approach this blue line, which means it's even more extreme positive. The Chaikin oscillator has crossed above the red line. That is now extreme positive. The money flow index is above 50 and advancing. The ultimate oscillator also above 50 and advancing. The vortex continues to go up with the green line. The percent B indicator, we closed just a little bit outside of this upper Bollinger Band, so that gives us an extreme reading. We don't spend very much time above or below Bollinger Bands. Now, you can also look at the Bollinger Bands, and they're getting quite thin. As we were chopping sideways, they kept getting closer and closer to each other. So just be aware of this, that we don't stay here for very long. And in this case, we would have to go down to get back inside of the Bollinger Bands. The RSI 14 and 9 are continuing to be extreme positive. Unbalanced volume is still positive. We actually ticked down a little bit with our 200-day moving average and our 50-period moving average for those stocks in the S&P. And we're coming back up and breaking out above this previous high. I actually added this line on here. If we do start to fall, is this going to become support, or are we going to continue to go up and give a run at the all-time high? On a trending basis, though, with the Heikin Ashi, we are positive. We're also positive with the Kegi. We're positive with the Renko, and we're positive with the three-line break. Longer term, we're still above this red line here with the 150-period moving average steady. Even though it ticked down just a little bit, it's right on that line. The Zohorchak method, I showed this in yesterday's video. We had been at -6. We've now come back up to neutral. We're right at 0. So that is showing some improvement longer term. And here's another long-term chart. I show this usually in the weekly videos. This is a trend line that goes all the way back to the 1987 crash. And we've come right up to the underside of this trend line. Are we going to be able to break through that? We did before, but then we've ended up falling down below it. Is this going to present some problems? Will we get above it and then be able to stay above that level? Looking at our other indexes, we did see an advance with the equal weight index as well as the S&P. We're pretty much going sideways with our ratio between the S&P and the equal weight S&P. We were up with the Dow, and this is another warning sign. The transports are really underperforming. We're breaking out. When we look at the Dow, we haven't even come back to this previous high yet for the transports, and we declined slightly with the utilities. So the transports are still underperforming the Dow. But the Dow is just looking pretty good right now and has a pretty healthy looking chart. The diamonds have switched from being neutral back over to positive. And the NASDAQ is also breaking out above these previous highs right here. That's usually a good sign. We want to watch and see, can we stay above that and then close above these levels? The NASDAQ 100 also is breaking out above some previous highs here. Can that be maintained? We're positive with the QQQs when we look at the Elder Impulse system. We are negative with the momentum of the NASDAQ 100, but we are starting to turn back up and we could cross back above the moving average. And this is another area that's slightly disappointing. We were down with the small caps. We're back down to this R1 level. Now, we haven't really broke below support here, but we want to really see these continue to go up and show more improvement, even though they're in a longer-term downtrend. When we look at the Russell 2000, we are coming off of an extreme reading with the RSI. We're just a little bit above this resistance level here that has been posing some real problems for the small caps. Longer term downtrend on a momentum basis, we are looking positive still, but we continue to be neutral for the Elder's Impulse system when looking at the small caps. The mid caps came right down and closed just a little bit below this R1 level, also working off of a longer term downtrend. They continue to be neutral for the Elder's Impulse system with the mid caps. The financial sector was up, and it's really showing some strength right now. We're seeing the blue line really starting to turn up after giving us a golden cross. The micro caps were down slightly, but we're still above that 100 level. The FANG index is starting to break out now. It was up over 1%. This is part of the mega caps that did well in Tuesday's session, so this is still looking positive. And we're finally coming back and getting above these previous highs, the previous all-time high and then the more recent all-time high, and setting a new all-time high now for the FANG index. So that is a positive thing. The dollar was up slightly, and it's still in a longer-term uptrend, even though it had been pulling back over the last couple of weeks. Keeping an eye on interest rates, we were down slightly with the 10-year yield. We were up slightly based on price, and we were able to get back above the 200-day moving average. This is still out of line here. When we take the 1 month, subtract the 3 month, we're getting a positive result. Logically, we should always get a negative result. And then a few charts to show you here. We've been camped out up at this high end with our 10-day average of the S&P 500 highs minus the lows. We've just been sitting here now for quite a while. We're still above zero when we look at the Amex, NASDAQ, and NYSE and take a 5-period moving average of the highs minus the lows. That's showing more broad market improvement. We're also showing some improvement with our longer-term new highs, new lows study for the S&P. And we're continuing to come down with the 2-year yield, which is probably giving some support to the S&P. So what's our outlook for Wednesday? Please be reminded that the European Central Bank will be meeting on Thursdays, so the market might be paying attention to that. Also dealing with earnings, also dealing with geopolitical events. Our technicals were positive and overbought. We are breaking out of the range, but we're also hitting some longer-term resistance. We will get the MBA Mortgage Applications Index. We get that every week. We're going to get the PPI, and then the big thing is going to be the FOMC rate decision and then the press conference that will come out. The decision will be at 2 p.m. Eastern. The press conference usually starts at about 2:30 p.m. Eastern time. And then keeping an eye on all the different geopolitical events. Here's the economic calendar where we're going to get retail sales on Thursday. We're going to get industrial production and capacity utilization on Friday. Seasonality. Another thing I wanted to add here in December, this is going to be quadruple witching, and we're in that week right now where we tend to be up 69% of the time, down 31% of the time. We're neutral to positive with the Dow, but we're neutral to negative seasonally when we look at the S&P and the NASDAQ. We're wondering, is the January effect going to kick in? It really hasn't started all that much yet. The small caps, they do good, and then they spend a couple of days just kind of either declining or going sideways. When we look at this chart, we'll be on the 9th trading day of the month, where we see a little bit of positive action here during a pre-election year. Then Carson has us pretty much flat before we do see some weakness going into the middle part of the month. According to their research, it's about the 15th when we start to see some more positive seasonality. Also, Wednesday tends to be the most negative day of the week in 2023. But when we look at the pre-election year, we do see positive seasonality here. We're seeing positive seasonality on this chart. We're also seeing positive seasonality on this chart and on this chart. Please be aware that at the end of the year, sometimes there is some negative action to finish off the year. Then when we look at the other Carson chart, we're probably beyond this downward slope now, and we're coming into more positive seasonality based on this research. And we're still kind of waiting to see about this equity clock chart here, where we never did really see any kind of downward movement. Is that going to be what happens this time? And this is why I show a lot of different charts, because you can take the same information and arrange it just in a little different way and then have different interpretations. When we look at the Stock Traders Almanac statistics, we're still pretty much flat for the NASDAQ, where possibly we're coming into the more positive time for the S&P. Our scenarios can't go with the down one yet, even though we are overbought and we're dealing with longer term resistance. It's really dangerous to front run that, because markets can be illogical for longer than we can remain solvent. And if you decide to go short here, the market can work against you for a long time. So we're still leaning towards the positive scenario, because we are still breaking out of the range. We're still looking positive, but we're looking really, really positive right now. And we're getting extreme when it comes to our trend. That's why this is bolded out in red. Our warning signs, the risk on posture, not really giving us a lot of confidence now. The momentum oscillators are improving, but they're still mixed. The Copic curve is negative, and we're still dealing with downtrends with the Russell, small caps, and the mid caps. When we look at the long-term daily special K chart, we are still positive, even though it's pretty much flattened out. I haven't shown that chart since the weekly video. The equity put call ratio based on 5 periods is going down. We're wondering, is that going to hit some kind of an extreme level? Longer term, we are going down, and that is positive for the market. We're still mixed with our oscillators, but showing some improvement. The parabolic SAR and the vortex charts continue to be positive. We're getting extreme with the bullish percent index for the S&P. The Zohorchak method, we've switched back up to neutral. We're getting a reading of 0 now. And small and mid-cap growth is chopping sideways, but continues to be positive. The financial sector is showing some strength, and our longer-term 50-period moving average study of the new highs, new lows is also positive. So our conclusion, we're still overbought. We're breaking out of the range. Is this some kind of a setup? Is the market being lulled into a false sense of confidence? I'm not saying that's what's happening, but just be aware of that. If you tend to plan for those things and be aware of them, then if they don't happen, that's fine. It's like having a backup or a spare tire that you don't need. In the short term, we are positive, but overbought. We're also extreme positive in the intermediate term and could be getting extreme where we're still positive in the long term. We do have that one indicator, the 150-period moving average study, that is still extreme positive. Thank you. I really hope you found this helpful. I hope you have a very good day, and I will talk to you in the next video.